Welcome back, and joining us on the show now is Atul Chaturvedi. He's chairman at the Palm Oil Alliance. Mr. Chaturvedi, hi, thank you so much for joining in. First of all, your sense on palm itself. We've seen the prices come off its highs, and interestingly, there have been various reports suggesting that India could be importing more going forward, especially in the next 3 months.
So if you really look at what has happened in the month of June, I think India has imported almost something like more than 800,000 tons of palm. And we feel in the coming months, palm is now the most competitive oil. If you really look at it, palm is now at a discount of something like $90 to $100 to soya. So in this scenario, we feel palm is definitely going to claw back its demand. Soya, again, looks to be interesting. So soya import also would continue. And if I look at the numbers for the month of June, what we are seeing is India has imported a reasonable quantity, or close to about 1.5 million tons, out of which palm could be anywhere between 8 to 8.5, soya anywhere between 4.5, and balance would be sun. So palm will definitely get back its mojo, and whatever loss they had incurred in the past, I'm sure with the improved pricing, it's bound to come back. No issues on that front.
Well, I'll come to that slightly later, Mr. Chaturvedi, but I also want to talk about the agriculture futures trade, because there is conversation back yet again coming in for this. You're hearing these representations from FPOs. There have been various reports suggesting that SEBI perhaps is also talking to some brokerages, talking about the viability of agriculture futures going forward and how it should really be worked. So that whole conversation really seems to be coming back. Now, whether it is about delivery, quality, discounts, conversations with the overall value chain, there's a lot left to be desired in the markets. What is your own sense?
In the last few years, when the NCDX or the commodity exchanges were closed, were we able to control the prices when the international markets moved up? Now, when you're having something like about 60% dependence on the international markets, it makes no sense not to be aligned to the world. So my take is that we have not done anything great by banning the commodity futures. And if the government decides to open it, I think it's a decision which should have come maybe a couple of years back. And late, even if it comes now, it's good enough. But it's important that this commodity exchanges are opened up. There's no reason why they should remain closed. Because funnily, the only place where the Indian importers can hedge are the international bourses, like KLC or Chicago for that matter. Why should we not have our Indian exchanges also? Because at the end of the day, all the oil is going to be sold in the country in rupee terms. So I think it's a welcome sign. I hope the government and all these studies which have been carried out in the last few years have shown that the exchanges are not responsible for any inflation prices, contrary to whatever the decision makers may be thinking.
That point is well taken. Chaturvedi, if the exchanges were to, or if the regulator was to allow trading in agriculture futures yet again, what changes would you want to see before it is reintroduced again?
Too many changes also can be counterproductive, because then the liquidity in the markets would not be there. So there has to be a reasonable amount of regulation, and it should. There's no reason why NCDX will not be in a position to implement them. They have a fairly competent staff, and they are quite adept at that. So my take would be, we should start. There's no reason why we should put too many checks and balances, which would result in killing the liquidity, which is the need of the hour.
Well, thank you so much, Mr. Chaturvedi, as well as Manisha, for joining us and giving us a sense of the entire commodity space and your views on it. Well, we'll now slip into a short break. We'll get you excerpts from our conversation with the management of SBI as they complete 70 years of operations once we get back.